Just like Warren Buffett, Charlie Munger was born in a middle-class family in Omaha, Nebraska. Charlie Munger was born in a roaring 20s. His grandfather was a federal judge and his father was a lawyer. Munger understood in order to make money, there must be a value exchange. He started raising and trading hamsters, but his happy childhood was interrupted by the Great Depression. To make ends meet, everyone in the Munger household had to work, including the young Charlie. Charlie Munger got a job at Buffett's family grocery store where he labored 12 hours a day to make $2. It is during this period of his life, Munger developed a strong work ethic and appreciation for money. Munger enrolled in University of Michigan to study math when he was young. He could get an A in any mathematics course without doing any work at all. He was choosing what for him was the easiest way to think about what he wanted to, instead of what somebody else wanted him to do. The devastating surprise attack on Pearl Harbor ripped Charlie Munger from his college life and thrust him into military service. Despite his exceptional IQ, Munger was initially assigned to work as a meteorologist, analyzing weather patterns for the war effort. But the event left deep emotional impact on him and many others, forcing young men to leave their studies and families to defend their country. While taking physics course to prepare for his deployment, he learned to think like a physicist. During the military service, Charlie Munger got married, and right after the service he enrolled in Harvard Law. After years of hard work and dedication, he finally achieved his dream of graduating and being admitted to the prestigious California bar in 1949. It was a momentous occasion filled with emotion and pride as he looked towards a bright future and the opportunity to serve his community as a respected member of the legal profession. Charlie Munger felt a sense of relief and contentment as he began his new job, earning an above-average salary of $275 a month. He believed that everything was falling into place and that he had finally found stability and success. However, little did he know that he was about to enter a difficult and trying period in his life, filled with uncertainty and hardship. The joy of getting his first job was short-lived, and he was unaware of the dark days ahead. Many young men in those days, Charlie Munger married early divorce in 1950s, was still frowned upon as a marriage ended with his first wife, Margaret, wanted to minimize the damage it had caused to their children. Just as Munger was beginning to heal from the heartache of his divorce, tragedy struck again. His son, Teddy, was diagnosed with leukemia, a death sentence in those days. The medical bills piled up and all of Munger's savings were exhausted. He was left with the harsh reality that, if he had been wealthy enough, he could have afforded the best treatment for his son. He was once again at a crossroads in life, questioning what could have been and grappling with the weight of the loss of his child. Charlie Munger was consumed with a burning determination to create true wealth for his family. The loss of his son and the financial struggles that followed fueled a fierce resolve within him to become the sharpest, most successful version of himself. He was driven to build a life of financial security, not just for himself, but for his loved ones, so that they would never have to suffer the way he did. He was determined to become the strongest, most capable and successful person he could be. In the 1950s, unlike the present day, practicing law alone was not a best way to achieve true wealth. Charlie Munger came to realize that in order to attain true financial security, he had to be a business owner. He understood that owning a business is one of the oldest and most proven paths to wealth. He saw that many wealthy people owned multiple businesses, and he decided to follow in their footsteps. He was doing legal work for a smart transformer manufacturing company in Pasadena, and he began to see the potential for taking ownership of the company himself. The realization filled him with a sense of hope and excitement, knowing that this could be the path to providing for his family and securing their future. Charlie Munger invested everything he had, even borrowing money, to invest in the company. However, the business struggled early on, and in order for it to survive, he had to step in and downsize the company. Much like how private equity firms operate today, buying a business, turning it around, and then selling it for profit. Munger considered the company a bad business, but despite the challenges, he still managed to make a respectable return. This experience was a hard-learned lesson. that became the foundation of his investment strategy. He came to understand that it is much easier to buy good businesses than to try and fix broken ones. It was a difficult decision, but it taught him a valuable lesson that he would never forget. The emotional toll of the experience was heavy, but it taught him how to be a better investor. Armed with this valuable lesson, Charlie Munger was ready to invest in wonderful businesses, but what he didn't know was that he would soon make his first million in real estate. Los Angeles was on its way to becoming the second largest city in America, and people were moving there at a rate of $3,000 a month. It became clear to Munger that he must not miss this million-dollar opportunity. Real estate is a highly leveraged investment, but unlike stocks, with real estate, you have active control, which allows you to reduce the risk. While advising his client on a real estate project at Caltech, Charlie Munger put his own money on the line by owning half of the operation. The Caltech property sold out quickly, generating a $400,000 investment. Munger didn't stop there. He immediately reinvested his money for more projects. The excitement and thrill of the success in real estate investment was overwhelming for him. It was a moment of pride and satisfaction for him. Even to this day, Charlie Munger is very involved in real estate. He built the Munger Science Center at Harvard, an achievement that filled him with pride and satisfaction. Surprisingly, all this time, Munger was still holding a steady job as a lawyer. It goes to show how risk-averse Munger really was at that time. Although real estate had made him millions, he stopped after just 5 projects. Munger now wanted to make money without having to involve too much debt. The experience of making money through real estate investment was a defining moment for him, and he continues to be involved in the field, but with a more cautious approach. He was proud of what he had achieved and was always looking for new ways to grow his wealth without taking on too much risk. Charlie Munger seized a great opportunity and made millions, just like many other millionaires and billionaires. They start out by taking risks and speculating, but once they make their first million, they play it safe by investing instead of speculating. Using his connections, he started an investment company with his friend and legal client after they bought a seat at the Pacific Exchange. Their main business was brokerage and market making, which is all about creating a market for buyers and sellers to trade. When there are a small number of buyers and sellers, it may not be possible to buy and sell the product. Hence, the market is illiquid. The market maker simply tried to make money for the bid. Ask spread by providing transactions, which creates more liquidity. Munger realized he could use the profit from the business to invest in other companies. He was acting like a true hedge fund manager. At that time, they bought small companies such as a car wash machine manufacturer and even invested in some car loans. Unlike other investors, Munger's strategy was focused on small growth companies. His portfolio was very concentrated in small cap companies. As a result, his performance was very volatile, but over the long term, it had much better performance than most people. By 1974, when the partnership dissolved, it had turned an average annual return of 24.3%, making Munger $5 million. Remember, this is the 70s. To be a millionaire in the 70s is very different from today. Well, Munger started his investment company in 1962. He also invested in a struggling company run by his friend Warren Buffett. Warren Buffett followed the investment approach of Ben Graham, which allowed him to build a successful investment partnership. However, there was a problem. Munger's approach was concentrated in small growth companies, and it was very volatile, but it has a much better long-term performance than most people. He was taking calculated risks, and it paid off for him. The emotional journey of starting an investment company, buying small companies, and investing in a struggling company run by his friend Warren Buffett was a roller coaster ride, but in the end, it was all worth it. Collecting stamps may seem like a tedious task, and for many customers, it's easy to forget about collecting them. However, this company struck gold by generating $100 million in sales per year by the 1970s. This is exactly the type of business Warren Buffett likes, the cash flow business like an insurance company. They collect a lot of cash up front, and Warren Buffett realized that he could use that cash to invest in other companies In December 1963, the Department of Justice filed an antitrust action against Blue Chip Stamp and forced the company to offer more shares to the public. This was the opportunity Charlie Munger and Warren Buffett had been waiting for. They accumulated a controlling position in the company, with Buffett being the largest shareholder and Munger the second. The 1970s marked the start of many hostile takeovers, but Buffett and Munger were the friendlier ones. After making themselves board members, they quickly gained control in order to invest the excess cash of blue chip stamps. We see a chain of takeovers here. Warren Buffett owns about 36 of Berkshire Hathaway, and he used it as a vehicle to take over other companies. And when he does, he uses the cash from those companies to take over other companies. It's not as simple as stock picking using blue chip stamps cash. Munger and Buffett invested in a small candy store in California called See's Candy Store. The opportunity to turn a small stamp collecting company into a cash-generating machine was an exciting and emotional journey for Munger and Buffett. They were able to see their vision come to fruition, and it was a defining moment in their careers as investors. But initially, See's Candy's plan of expansion faced a great challenge that Buffett didn't quite anticipate: the copycats. In 1973, Russell Stover Candies decided to launch a campaign and try to beat See's Candies at their own marketplace. They put in stores that looked exactly like See's Candies, called Mrs. Stover's. Facing such a threat, the CEO of See's Candies, Chuck Huggins, turned to the only person capable of handling such a matter: Charlie Munger. He dealt with Stover's Candies with an iron fist, taking bold and decisive actions to protect the company's market share and reputation. The emotional toll of facing a formidable competitor and the pressure to come out on top was immense, but Munger was determined not to let the copycats win. It was a defining moment for him as he put his business acumen and strategic thinking to the test and emerged victorious. Charlie Munger assembled a team of the best lawyers and went after Stover's Candies like mercenaries, ready for battle. It worked. Stover's Candies got scared and immediately backed off. No other candy stores dared to do the same after that. With this victory, Berkshire Hathaway thrived, acquiring one company after another, including the famous Coca-Cola deal. But neither Buffett nor Munger could anticipate the biggest threat to Berkshire Hathaway that was yet to come. The business of Berkshire Hathaway is extremely unique. It owns a large number of separate businesses and also has its own subsidiary. If it weren't for Munger's business model, Berkshire Hathaway would have had trouble scaling up, but it may have reached its limit. The emotional journey of building a successful and unique business model and then facing the biggest threat to it was challenging, but it also helped them to become more resilient and adaptable. Both Munger and Buffett believe in the circle of competence principle, where they stick to things that they understand. But what it really means is predictability. They want to invest in companies where they can confidently predict what will happen in the future. Recently, Munger and Buffett decided to expand their circle of competence by investing in companies like Apple and Amazon. This decision was not just a business move, but it also reflected their willingness to take on new challenges, to learn and adapt to new industries, and to have the courage to change their approach. The emotional journey of expanding their investment horizon and taking on new challenges was exciting and fulfilling. It showed that they were always open to new opportunities and willing to take calculated risks to grow their wealth. As Charlie Munger and Warren Buffett start to realize that these tech companies behave like the kind of companies that they like, with predictable cash flows and strong fundamentals around them. Munger's concentrated small-cap investment style is hard for the human psyche, but it's the best investment style for retail investors. If you invest in any large caps, you're facing competition from institutions who probably have done much better research than you did. Over the course of his long life, Munger perhaps has gathered more lessons and experiences than anyone. He thinks about business in terms of first principles, like a theoretical physicist. It's an emotional journey for him, one filled with lessons, experiences, and a deep understanding of the business world. He's always learning, adapting, and evolving his approach. And this is what makes him one of the most successful investors of all time. Charlie Munger's life has been nothing short of legendary. He has faced multiple economic recessions, gone to war, and suffered from the worst personal tragedy, but he never gave up. He dealt with whatever life had to offer, with an unwavering determination to come out on top. He is an inspiration to us all, an embodiment of resilience, grit, and an unbreakable spirit. He has become one of the most iconic figures in the business world, a true legend whose life story is filled with emotional ups and downs. But through it all, he never lost sight of his goals and aspirations. He is a shining example of how to overcome obstacles and achieve greatness, and his legacy will live on forever.